Gold crashes by 10%, and then the Dow hits 30,000 breaking record highs. But 50 million Americans are without food and starving for Thanksgiving. Well, let's find out what's gonna happen next. So a bit of financial recap here. Gold dropped this week, and I've been doing a bit of a machine learning series. You can watch that. I built a predictor, and honestly, it's been working okay. It tells you when gold is deviating and there's strong external forces affecting the price of gold. You can see it clearly in the accuracy of the predictor, and we saw quite a few news items that affect the price of gold. Typically, vaccine news. There is also the sort of transition news, and then there is also the fact that the Dow Jones hit $30,000, and that is record highs, and it's a crazy level. But I want to talk about something else. I want to talk a little bit about the consequences of what you're seeing here, right? I think that overall, gold dropping to 1800s, this is my personal opinion, it's not advice for everybody else, is great news for stackers because it means that gold is on sale right now. I mean, if it goes any bit lower, it means that you can pick up more gold for cheaper. That's silver too. Silver is on sale. Silver is back to levels where I kind of want to get back in and buy some more silver. I'm able to buy it right now at around 28 Swiss francs, somewhere around there. And for an ounce of Philharmonic, that's not too bad. It's kind of still expensive according to American standards, but for European standards where you're charged a tax on silver, it's not too bad. Gold, you don't have tax on it right now. Gold sovereigns, they are sub $400 a piece. I have not seen sub $400 gold sovereigns in a while. I ordered some. I'll be picking them up probably end of the week or beginning next week. We'll see if I get news from my orders. So let's go back to the key point. The key point is, well, the Dow yesterday hit $30,000. That is record level highs. And if you look at a lot of the stock out there, there's Apple stock, it's rising. If you look at all the technology stock, look at Tesla. Like Tesla, December last year was $40. Now it's a few thousand. I've never seen a rise like that for a stock. It was just like a straight up vertical upward motion. And in my opinion, this is my opinion, is that people are losing their minds. People are scared. People have no idea how the economy is turning out, and they're trying to invest into anything possible to maintain their wealth. And they see rising things like Tesla, and they jump in. Do I recommend that you go out and buy Tesla at current levels? No. I honestly, I don't know. I don't know if it will keep going up or it won't keep going up. But one thing is clear. If you read what happened after the 30,000 level, is that you can see clearly that jobs are not following the progression of the stock market. You see recovery stocks almost surging after they announced the vaccine, but nobody's going on tours, cruises. You cannot go to the Fiji Islands on cruises. If you have a private yacht, yes. But if you are a normal person who buys into cruises and all these type of tour stocks, you cannot go anywhere, right? These places, these type of cruise line stocks and everything, they don't just depend on the United States. They depend on the rest of the world opening up. And the rest of the world isn't opening up. There's surging cases in Europe. People on the islands, they don't have the facility to handle an outbreak. So they're not going to let cruise lines out and come into their ports and then have people who are potentially infected walk around their island, and all of a sudden they've got an outbreak. They'll still let billionaires come because they spend a lot and there are few people, and it's very unlikely that they, 5 billionaires, coming to your island, that they're all infected. And even if they are infected, you can just quarantine them 14 days and then they've it's done. But the key point is jobs, Main Street jobs is not keeping up with Wall Street stock prices. Oh wow, who's surprised? I mean, Dow Jones 30,000. How are the jobs doing? Well, we have we have increase of jobless claims. No surprise there. I don't think it's a surprise that the labor market is struggling for recovery. A lot of people are being laid off because of surging cases and restrictions, semi-lockdown restrictions, full lockdown restrictions. It's not just happening in the United States, it's happening all over Europe. And yeah, it's not even a surprise, but the stock market's surging. What else is happening? Well, like stock market surging is, for me, it's kind of like the last hoorah before a massive drop, and my dog is licking me, so the camera might shake a little bit. He wants some food. Go away, dog. Go away, doggy. Go away. There's nothing for you here. I'm reading the news. And you know, like the surging markets are, I don't know, I think it's a symptom. It's kind of like before the Great Depression, it was crazy, the markets. But what really for me is an indicator is not the market. It's what's happening before Thanksgiving. And this news kind of shocked me, right? I was wondering, okay, so the stock market is doing well, so how are people doing? And I started Googling and looking at job reports and something. Then one thing came up. It was the fact that 50 million Americans, right, in the United States are starving. I mean, I'm not going to use the bullshit like politically correct term, they're food insecure. I'm just going to tell you straight up, like 50 million Americans are poor and they're starving because, well, they're out of jobs. I mean, if you can't work, you don't have income. If you don't have income, you can't buy stuff, right? Well, then you're going to cut things. People are going to go into their savings and start cutting. They're going to first cut the things they don't need. Like what? Like toys, entertainment, and all of these things. Then they will start cutting unnecessary things like buying new clothes, renewing their car. Also, maybe they might cancel some subscriptions and so on. Okay. But when you get down to it, food is a basic necessity. People don't want to cut food beyond a certain point. They can't cut food. If 50 million Americans are starving or not food insecure, they're starving for Thanksgiving and they cannot choose to put it on the credit card, it means that they have zero funds and they can't even spend even more debt to buy food. That is a problem. That is such a huge problem. It means that 50 million Americans are not able to fuel any further consumption with debt. That's the thing. Here's the thing, like in any previous sort of recession, what people could have done, because they're still working, they could relaunch the economy with debt and finance future consumption with debt. However, the current situation on Main Street is so dire that they cannot fuel that. Now you're thinking, yeah, but it's not so important, 50 million, there's what's the population of the United States, like 400 million? No, it's serious. If you have a bit more, 15% of the population cannot feed themselves, right? That means that this is like people living below the line of poverty, because if by the time you cannot feed yourself, you are poor. I mean, that's the last thing you cut. It means that really you have no funds. And really, I mean, and they're making lines behind this because 12 million more people will lose benefits on the 26th of December. That's crazy. It's cut here. I mean, right now there's 50 million. Another 12 million people could potentially be in the same position as those 50 million people. That's insane. That's when you reach 62 million, you're at 20% of the population is starving. Do you know what countries are where you have like 20 million people starving? That's like horrible. That's really horrible. And people think that the Dow can keep rising. No, they can't. In this type of situation, it's like, honestly, it's what I call, the liquidity. That means the money in the market, right? it's fleeing to what it thinks can protect it. It's kind of just like running crazy to try and like keep afloat. And you're like, why don't they exit to the dollar? Because if everybody exits for the dollar, they might have margin calls and so on. And some people might already be on margin calls because, it's not the whole stock market is doing well. It's only a few stocks within the stock market pulling it up in the indexes, and there's a lot of garbage in there. And if you have, I would say, positions on those garbage items, and you get margin called, you could be like at 5x, 6x, whatever your leverage. It could be pretty tough, and you had to liquidate positions. Potentially, some people who liquidate the gold positions. That's one theory I have behind why gold crashed recently. It's not so much weakness in gold; it's the fact that people probably got margin calls before Thanksgiving, and they wanted to close their accounts because Thanksgiving is essentially 4 days where you're not trading anything. And then potentially you have no time to react. So people just close their positions before Thanksgiving, which is very logical. But for me, it's quite terrible that, the real economy cannot follow the Dow Jones, which is just surging like crazy. And if you look through I'll put a link to the article, but yeah, it's saying that there's 50 million people, there's 6,000 cars outside of food banks in Dallas, in Texas. People are poor right now. They're poor, they're out of jobs, and they can't feed themselves. That is basically the overall economy right now. Right now, I think going on for until like March and February, we are at a real risk of seeing a downturn in the stock market. Or if we don't see a downturn in the stock market, it can't keep rising. It's insane that it is so disassociated with the overall economy. That means, what do I mean by that? I mean that the overall economy, people are not earning a wage. There's no stimulus. Even if there is stimulus, imagine there is stimulus, right? It's life support at this point. Like stimulus is just basic life support. Imagine even if people got stimulus, it's not enough to rethrow the economy. People still have, once they get stimulus, right? People right now are in so much debt, right? Individual debt, that if they get stimulus, what's going to happen with the stimulus money? It's going to go off to pay off the debt. That's what's going to happen. Like, I don't know what's going on in like Congress's head right now, but they're like, oh yeah, we need to do like $500 billion of stimulus and that'll be enough. No, if you have 20% of your economy right now not consuming, relying on food banks, this is kind of like, it's going to accrue economic deficit. It's kind of like compounded interest, but it's the reverse. Basically, it's going to compound the economic growth debt over a period of 3 months. And if you're going down, if you have no consumption, you have consumption debt, and you have everything else accrued all together, there will be a point where it just implodes. And, and if it implodes, I would say I don't know when it might implode. The way I see it, it's most likely to implode sometime next year. Not so much Christmas. Things are going to be calm. It's kind of the calm before the storm. Beginning of next year, people are like, okay, let's try and pulse more of the stock market. But countries might start exiting the stock market because they see too much risk. The second there is more than a 2% sell-off on the index funds, I believe margin calls are going to come in. And if margin calls come in, it's going to lead to further sell-off. This is the part where people are scared. They're scared that if there is a sell-off, they can't meet margin calls. So some people are piling more money into the market to drive things up. I would say institutions are doing that. And the reason why they do that is as long as it can maintain it afloat, they're hoping that they can maintain it afloat before the real economy catches up. And they can ride it out without losing their shits. But I don't think it's possible because right now, if you look at what's happening in the governments, is that there's a deadlock. None of the governments want to be the ones blamed with spending too much. That's risky. But because of their like aversion to being blamed, they're going to take the worst decision possible, which means delay and do nothing. In normal cases, when government does nothing, it's pretty good for the markets. But when markets fail and you don't have direct intervention, this is the part. It's not about being like, big government controlling markets, but sometimes markets do fail. And if you don't want a massive disaster, like a massive humanitarian disaster and a massive economic disaster, you do need external intervention to bring the market back up, right? Now, I'm not saying this because it's mainstream or whatnot, but imagine this. Let's say like all of a sudden everybody's like buying fuel, right? You have a market, and your market people depend on transportation, but then you have an oil crisis. That means that like the major supplier of oil in the country fails, they go bankrupt because of bad management and so on. It happens. And then all of a sudden you have an oil crisis and nobody can ship goods around the country. That's a point when you have market inefficiencies, right? You can say, oh, foreign companies can come in. Yeah, but they might charge like really crazy rates. What you could have is government organizing itself together. They're doing not for profit, but for the benefit of everybody. There's a lot of things that governments do for the benefit of everybody. They pave roads, they make schools, hospitals. These are not typically profitable on small scale. Or power grid. Power grid is a typical example of something that you can have governments working and being efficient, because it is not so efficient to have individual power grid companies. But I think in the United States there's a lot of large companies running whole power grids, which is kind of like surprising for me, because in Europe you don't typically have that. And typically we pay less for electricity. I mean, I pay peanuts for water and electricity. When I was in the US, it shocked me, like the electricity bill was really expensive, and also phones were really expensive. It was more expensive than in Switzerland, where we have private phone companies, but we have, I don't know, I've got like really fast 5G on my phone. And when I was in the US, when I wanted to get data, it was so expensive. I had data limits. I had to go with like a single network. And then sometimes I wouldn't get access to the network. It was complete insane. Like I was like, holy shit, this is like just terrible service. Because, some things require economies of scale. And if you don't have economies of scale, you're going to pay out of pocket a ton of money to get it running. Anyways, back to the subject here is that, 40% of Americans are struggling for food. 50 million are starving at the end of the year. That's not a recovering economy. That's not 30,000 Dow real world. You can't sustain $30,000 level of the Dow Jones with 40% of Americans food not being able to afford to eat what they want, and then 20% of Americans in a state of starvation. Like that means that people have clearly run out of money, and they have reached the maximum amount of debt limit they can take on as individuals. And I don't know what's going to happen next. However, what I think might happen, okay, I've been buying up gold, silver, and platinum and whatnot. And I think that these items will preserve your wealth during the upcoming turmoil. I don't think that we're going to end up in the state where, in Venezuela, everybody's like, I'm losing natural light. I did this video a little bit late, but I don't think we're going to end up like in Venezuela, where people are, going to fight for food and so on, because still there could be enough public resource. We're not past a brink of no return. However, I would like to point this out. If I would say, by December, the United States Congress and Senate cannot agree on a stimulus package for the people, the United States citizens. I'm not talking about Republicans or whoever. I'm talking about the United States citizens. Then there could be a serious problem, and this problem is just going to get bigger by next year. I think what Republicans want is they want to wait until the confirmation of Joe Biden, and then they want to see the primaries in Georgia to decide on who's going to be the next senators in Senate. And then if they can deadlock and block Joe Biden, and they're like, yeah, but they're not seeing the bigger picture. They're not seeing the bigger picture is that if they wait until January, it's going to be a point of no return. It's going to be the point when the internal economy of the United States, which is a consumer economy, depends on people willing to take up debt, that economy will be gone. Because if you have over 40% of the economy, the 40% of the United States economy having experienced this a crisis, a food crisis, a supply crisis, or not just, it's not just that, like, you know, before you, let's say like 2 years ago, in order to have a consumer economy, people need to have confidence. And if people are starving and they've experienced traumatic life event, such as the current pandemic and the starvation that follows, they're not going to go out and spend like crazy. It's not the same as during the Great Recession, you know, during 2008, when people were they were out of jobs, they were at risk, but there was never a point where they say, oh shit, I can die of hunger. You know, that is very different from the current situation. Right now, in the current situation, people are going through what should be, like right now, a very festive moment, Thanksgiving, and they are seeing that they cannot afford food. And that is not conducive to a recovering economy in the future. You know, this is the point that whether you're Republican or you're Democrat, you have to realize that's the reality of the economy. The reality of the economy does not depend on institutions. The reality of the economy depends on people, individuals, to go into the market and buy stuff, to buy food, to buy things they want, to buy the Xbox, to buy like iPhones, whatever. This year, I don't even think that's happening. Like, imagine this. The new iPhone is what, a few $1,000s? Who's buying that? Like, who's buying that? It's not the average American who's buying that. You know, before they might put it on the credit card. Do you think this year they're going to put it on the credit card when they can't feed themselves? No, people are not going to put it on the credit card. Are people going to buy the new PlayStation? No, they're going to put off buying the new PlayStation. It's going to be a tough year for all of these companies. I suspect that most of them are going to miss earnings. When you have 40% of the population not able to feed themselves, that, like, okay, 20% not able to feed themselves and 40% not, like, included in the 40%, just to be clear, 40% not able to feel secure enough to buy everything they want to eat. Do you think that they'll go out and buy a PlayStation? That's or a Tesla or whatever? No, they're not. So what is going to happen if people are not consuming the United States? The United States fiat currency dollar is backed by the willingness of the American citizens to consume, and also the that's the main economic backing. But then there's also the sort of army backing. You know, the fact that the United States has got lots of nuclear weapons, and they have a lot of oil allies. And if you want to buy oil from those oil allies, well, you need to use dollars. But I digress. But the major part of the dollar that backs the dollar is people buying stuff with the dollar. That's the definition of what powers a fiat currency, that people are willing to use that currency to buy stuff. If people are not willing to use the dollar, that means American citizens, United States citizens, are not willing to use the dollar to buy things because they can no longer afford to buy things. That's when you have currency problems. That's when, you know, I don't know, like they talk about K-shaped recovery, you know, that the stocks are going to go way up and then, and people are actually starving. It's not like K-shaped recovery is going to happen after January. We are in a K-shaped recovery. That means that the people who had the assets are in a good position. They've recovered. The stock market's high. What's going to happen next? Coming like end of the year, they're going to close accounts. There's usually a downturn in December. You know, people start selling off their positions. They start closing positions to close the end of the year. If people start closing positions and we have even like a 2 or 3% drop on index funds, it's going to trigger a massive sell-off because then you have margin calls come in. Brokers just don't want to lose all their money, so they're going to start making margin calls, right? If they start making margin calls, it's going to have a knock-on effect. That's what I'm saying. So let's start. Let's go back to beginning. Is $30,000 for Dow Jones something we should celebrate? No, I don't think so. Should you be worried that there's over 50 million people who are starving in the United States? Yes, you should be worried. Should you be worried that gold dropped 10%? No, you should not be worried. See it as a buying opportunity. That's what I'm seeing. I've ordered more sovereigns. I've got more sovereigns coming in. I've got not 1 ounce of sovereigns coming in, a little bit less, around 0.7, so 3 sovereigns. I might order a 4th or a 5th sovereign. I'll see how. I have a bit of cash left over from my paycheck after I put everything into my savings and then into my some investment accounts. I've been not stock investments, but I have some other specialized investment accounts I use to reduce my taxes. And I think in the US, you call them like IRA type accounts. For my accounts, I pretty much have them as cash positions and I use them as financing for other projects, which you can do in Switzerland. And also I might order some silver. But should you be worried that silver and gold dropped? No, you should not be worried. It's really a good buying opportunity to buy into the metals. And honestly, like I think a few months ago, I told everybody, you should pick up some platinum because right now it's really dirt cheap. It went up a bit during the crash of gold. The thing is, the reason why I suggest people buy platinum when they're buying gold too, is that I've noticed that these two are counter-cyclical, right? When gold is about to rise, platinum tends to be at its cheapest. When gold is at its most expensive, when it starts dropping, platinum starts rising. There is, of course, like points where they cross, but I think we're at the end of a platinum cycle almost. We're kind of at the bottom of the platinum cycle where platinum is almost as cheap as you can get platinum for. And gold is gold. It's what it is. And I think, if you can buy a bit of platinum, you can buy a bit of gold, and you buy a bit of silver, and you try to diversify between the three, you're going to be pretty good in the upcoming year and the year after, for at least for the next 5 years. You're going to be okay. But honestly, despite the fact that, I think that these are good investments and you might preserve your savings, I'm really a bit upset by the fact that people are starving in the United States, because honestly, it's not a good feeling to starve. To not have money and be in a bad position and to not be able to buy food is a horrific feeling. I don't know if you ever experienced it, but it's a horrific feeling to not be able to walk away. Like, you go into a store, you see some food you want to buy, and you can't buy it. It's a terrible feeling. I don't wish that upon anybody. I'm lucky I'm not in that situation, but it's so horrible to not be able to have food. If you have met people who have starved, you can tell that it's a life-changing experience. You never change it. It's extremely traumatic. And then and I think most people, especially people in the United States, a lot of people have not experienced, at least until the recent, I would say 10 years, have not experienced severe, at least on the scale. There were always people who could not afford food and depended on food banks. But at the current severity and the current scale, I don't think that there ever was that amount of people that suffered so much in the United States. Now, it doesn't mean that other people around the world are not suffering from food shortages. There are a lot of countries that have suffered from food shortages, water shortages. If you go to South Africa during the droughts, it's pretty horrific because people are anxious. 2 days without water, you're dead. So yeah, that's even more severe, and it comes really quickly, especially in hot areas. So yeah. Anyways, on that note, as a stacker, gold dropping a little bit. It's just on sale. It's not too bad. I'll do a bit more about the machine learning stuff, but the machine learning, I've noticed some interesting things coming out of the computer. It's not a crystal ball, it cannot predict the future, but it's telling me some interesting things, such as there is a potential for an inversion coming soon, because there are some indicators that are indicating that we are potentially in oversold territory, and the machine learning algorithm is picking it up and giving indicators that, it's possible that we have a reversion, and that for gold and silver, at least things are going to look good. But you have to realize that, we are in a position of privilege because we have the extra income to be able to stack. And then there are 40 million Americans who cannot even afford food. So that's 50 million, sorry. Well, that was my message today. And keep stacking good health. And I hope you well. Dave out. As an American citizen,